Good evening, everyone, and thank you for attending Giraffe's webinar on risk and products. Uh, Welcome to one and all. Before we begin, I would like to welcome Ankit, who heads our risk, and Ratnakar, who is a very capable member of the risk team. They've spared time to educate us all on what is the process that we follow at Giraffe. Quick two bits on Giraffe itself. For those of you who are familiar, we are a platform for fixed income. We offer opportunities between 6 to 20% yield across the 30-day to 3-year tenor bracket. We try and create opportunities that would allow any investor to create a fixed income portfolio, given their own risk appetite and given their own tenor restrictions that they may have. What you have on screen is now the core team of Giraffe, Saurav and Vineet, who are the founders. Saurav has about 10 years of experience, largely in corporate finance and raising capital. His experience was, he was an engineer in BITS Pilani Goa campus, then IIM Ahmedabad, and then he began his career with Feedback Infra, moving on to corporate finance side with Vadva, and then subsequently another developer in Bangalore, raising capital in the form of structured debt, mezzanine debt, equity from global institutions. Vineet, who's the other co-founder, he began his career in Axis Corporate Banking, then joined Piramal. And under Piramal, he was looking after the real estate and hospitality segment and managed a book of $1 billion in the lending space. All of us that you see below, my own background, I'm a civil engineer by trade from NIT Surathkal. Then I'm Ahmedabad. Then I was with Royal Bank of Scotland for a couple of years with their capital allocation and portfolio management team. We used to look after the bank's balance sheet from a risk-weighted asset and ROE perspective. Then a couple of years in private equity, investing into logistics and leasing. And then 6 years I was with a venture capital firm before joining Giraffe. I would also like to now request Ankit for a quick introduction and then Ratnakar for a quick introduction as well.
Thank you, Prateek, and thank you everyone for joining the session. I have a background of around 12, 13 years with different banks. I started my career with ICICI Bank and then worked with HSBC, Yes Bank, and Piramal Capital. Did my postgraduate from IIM Kozhikode and have been part of Giraffe since day one. So I'm handling credit risk here. And Ratnakar, now you would like to introduce yourself as well?
Yeah, so I have done my engineering from NIT Rourkela. Then from IIM Lucknow, I have done my MBA. After that, I have like around 5 years of experience in like HDFC Bank, Axis Bank, and mostly in finance space.
Thank you, Ankit and Ratnakar, and welcome. To our audience, I think what we have tried to do at Giraffe is create a team which has reasonable experience in financial services, and that brings together all these opportunities. We have been supported and raised a little bit of money from Accel Partners, from Capital A, from Mankekar Family Office, and from entrepreneurs who have supported us, which is Siddharth Shah, Ramakant Sharma, and Ronak as well. Next slide, please. What we bring to the investors are the following products at the moment, and we try and widen this basket more and more so that investors like yourselves have the choice to pick a fixed income asset and really create a diversified portfolio across the risk and return spectrum. We begin with the safest asset, which we believe is a T-bill or a government security from 90 days to now G-Secs going up to 5 to 10 years. We typically deal between 30 days to 3 years. The T-bill and G-Secs yield about 6.5 to 8%, depending on where you buy them. We then have commercial paper, corporate debt in the form of bonds, invoice discounting, leasing, and then venture debt. All of them, again, giving various yields and tenor brackets. I think our idea is that for any financially aware investor today, about 20 to 30% of their portfolio goes to such fixed income opportunities, and that allows them over a period of time to earn a double-digit return, having a secured book and not subject to market volatility. Next slide, please. What we have delivered so far, we started in September 21. That was the launch of the platform. At that point, we had done by December in the first 3 months about 50 crore of investments with a team of 19 people. Where we are today in February 22, or rather February 23 now. So in about 1.5 years, we now have about 70,000 registered users. We have done total investments of just about 1,200 crores. We have a team of about 75 people. We have returned capital, most importantly, to our investors of 650 odd crores. So, and without any delays and defaults. So far, with the help of our trade team, with the help of our investment team, we've been able to build the investor confidence. We've been able to deliver them returns, and we have been able to do that without any delays and defaults. And how we have made this happen, we'll request Ankit and Ratnakar to walk us through, and what is the process that we follow at Risk.
Yeah, thank you, Pratik. So today in this session, we will try and attempt to make you understand the credit risk assessment process, which every deal on the Giraffe platform goes through. So basically what we will do, we will divide the entire discussion into four sections, where in the first section we will explain the credit assessment flow on the on our platform. Then in the second section, we will make you understand the amount of analysis we do against each of the borrower before onboarding, how we do the assessment. We also have an internal credit rating score which we assign to the borrower based on different around 40 to 45 parameter on which we evaluate them. In the third section, then we will also make you understand what is our monitoring process, because after once onboarding the any of the clients, so on a monthly basis, we do a very rigorous monitoring as well. And in the last section, we will open it for Q&A. So before we move on to the actual presentation, so I'll just give a perspective to the investor that when Pratik showed us in one of the slides that our yield range from starting from 6% to 20%. So investors should also be cognizant that when we say 8% to 20%, the risk, which is the underlying risk, also it increases as you move from the 88 to 80 to 20% bracket. So for the investor, it is also important to understand what kind of risk they are taking, and as per their risk appetite, they should make their investment decision. So when we see at the 8% bracket, these are basically we have treasury bill which is backed by government. Then we have high AA rated client where we give that 8 to 10% bracket. Then on the other side of the spectrum, we have venture debt and revenue based discounting where where the yield is in the range of 18 to 20%, and invoice discounting is somewhere in the middle. So when we say all this entire range of yield, so it become very important for the investor to understand the underlying risk and make the investment accordingly. At the same time, it also become important for us as a Giraffe team to evaluate each of this deal and mitigate through our credit assessment process the underlying risk. So in the next 10, 15 minutes, 20 minutes, we will try to make you understand how we go about doing, how we go about mitigating all this risk. So my colleague Ratnakar will take you through the entire process and explain the entire thing, how we do the assessment, what are the processes, what are the credit framework which we are using over here, what are the parameters which we evaluate each borrower on, and what is the monthly evaluation process. Over to you, Ratnakar.
Thanks, Ankit. So basically, if we'll look at the credit approval process at Giraffe, so first we originate the deal, like our investment team talks with the client and they bring the client to the table. Then we do the preliminary evaluation. We go through like the background of the client, we take the market feedback and we assess whether at the preliminary level, whether we should go ahead with the particular proposal or not. And then after we get the in principle approval, we ask for a lot of data from client, do a lot of due diligence. We'll again explain that bit in the latest stage. After doing the due diligence, we ask a lot of queries to the client on the credit queries, whether what kind of risk we are seeing, how we can mitigate those risks, and then we submit the internal credit a note to the IC committee, and then after we get the approval from committee on that particular deal, we execute the document, and then after doing the disbursement, we do the post-sanction monitoring also. So at overall level, we can divide this entire flow into three buckets. One is credit assessment, second is deal structuring, and then third is the monitoring part. Next slide, please. So in the credit assessment process, we'll basically try to get answer for three different parameters. One is whether there is any red flags about the company. Second is we try to understand the business model of the company, at what space they are currently at, what kind of competition they are seeing and their entire business model. And the third, if we'll have taken exposure on that client, whether they will be able to repay us. So talking about the first part, whether there is any red flags, for that we check the we take a lot of market feedback from their existing lenders, from their existing investors, and also check a lot of public database like MCA portal and all, to do the due diligence, where we can check the credibility of management, whether there is any legal cases on the management or not. We also take their bank statement to analyze like what kind of transaction they are having on month basis. So this is where we try to understand. If there is no red flags, then we proceed to understand the entire business aspect, and then we take a call. So while we talk about the business model, we basically try to understand whether the company currently at what state the company is, whether there is any revenue visibility, or whether in the foreseeable future how sticky their cash flow is currently, and their profitability, their margin, what is their market position currently, how the competitors are doing at that space. So we'll try to address a lot of this parameter at the company's level. We ask a lot of queries to the borrower, so that they will we get a clarity on a lot of business aspect of the company. Then if after we take a lot of comfort on their business model, we try to understand their financial position. And you can see that from the low risk to high risk, we have identified like what is the source of income that will give us a lot of comfort. So first will come their internal accrual. So if the company is generating a lot of cash flow, then they will be able to repay the debt. We assess that parameter. Then if they will not be able to repay the debt from the existing cash flow, whether they have sufficient amount of cash on their books from where they can repay that. If they don't have cash, whether they can arrange other debt, whether they have some undrawn debt lines where they can tap into that and repay us. If they have any strategic investors on their book, whether they can support the company at crucial level, they can, whether they can infuse any equity or debt. And then at the last stage, whether they can tap into external investors and they can raise equity round from them. So all these kind of financial analysis we do, whether the company will be able to repay at the maturity. That kind of analysis we try to do at the first stage. So
Just to summarize this slide, so basically what we do, we evaluate each of this borrower at the time of onboarding itself across 48 to 50 different parameters. And basis on this parameter, which are somewhere related to all these different aspects like revenue visibility, when we say conduct of the client or the source of income, what is the source of cash flows. So basis all these inputs, we have around 48 to 50 parameter where we evaluate the borrower, and basis that we assign a Jiraaf score, which basically help us identify what is the kind of risk we are underwriting. And then basically basis that this proposal goes to our IC committee where we brainstorm on the proposal given the underlying risk and whether we should go ahead with the transaction with the borrower or we should do the deal with the borrower or not. So this is to summarize this slide.
yes. Yeah. So now coming to the deal structuring part, after we analyze all those aspects, we come to come to an assessment level where, like, let's say the company is asking for 20 crore limit, whether the company has that kind of capability to repay 20 crore at the end of the tenure. So that limit assessment we do from a lot of factors. After that, we identify what are the to underwrite this kind of risk, what kind of mitigants we should have in place. So we ask for a lot of collaterals, such as, let's say, asset of the company. In if we are doing leasing of asset, then we ask for that asset to be hypothecated to us. Also, promoter guarantee, corporate guarantees, and like control over their escrow account, current assets. So all these kind of collaterals we try to negotiate with the client to keep those with us. And then we also build the covenant, so that if the company is not doing well, if they go off track, then we can tap into that, we can invoke those covenant, and we can recover our money at an earlier stage. So the covenants can be any form, like breaching of debt equity ratio, fall in revenue and all. So this is the way we come to a assessment of limit. So after we take the approval from IC and do the deal, then we do the monitoring of those, but all the deals. Basically, it starts with asking monthly data from borrowers after they provide us their monthly MIS and their borrowing level and all the month on month basis data. Then we check whether, as per a projection, what should be their revenue level, and actually what kind of revenue level they are achieving, what is their profit margin, and whether there is any deviation in any of the parameters where at the beginning we have taken comfort on. So after assessing all the limits, we again check with the public sources whether they have any kind of rating upgrade, downgrade, and any kind of negative news on the counterparty. And then we also check whether the covenant we have set earlier, whether there is any breach in covenant. And then we do, as Ankit mentioned earlier, that on the basis of 50 parameters, we identify Jiraaf score. So on each month after we get MIS, we also update those Jiraaf score on monthly basis for all the borrowers. So after like doing that, we come to the risk categorization of the particular borrower, whether they are doing well, or like they are doing very well, or they're not able to meet their projection level. So accordingly, after identifying all that factor, we present our finding to the committee, and then on that particular borrower, we take whether we should go ahead with increasing any limits for that because they are doing very well, or maybe reducing the limit or the exposure at a later stage because they are not meeting the expectation in terms of their financial performance. So that kind of assessment we do at the post-sanction monitoring level.
So just to summarize this slide, so on a monthly basis, the idea is to identify the early warning signals. Basis the parameters we set by, this is the covenant we have set in, basis the MIS which we get on the monthly basis. So all currently we are working with around 40 to 45 active borrowers on our platform, and we evaluate each of these borrower on a monthly basis on all the parameters. And basis that we identify whether there is an early warning signal of stress in that borrower, and accordingly we decide for a corrective action whether we want to continue with that borrower or not, or we want to reduce the limit, or and if in a very high risk category, maybe we will not continue or do a deal with that borrower. So this is, I mean, in summary, what we basically do when we say credit assessment process on Jiraaf platform. So every deal goes through a very rigorous process, starting from the onboarding of the borrower till the monitoring and exit of that borrower from our platform. I mean, as we have already explained, so we have multiple level of approvals. We have an initial approval process in place, then it goes to the committee approval. Every place then we have a lot of checks in place. So it's a rigorous process. As we said, we work in a high risk segment. I mean, when we say 15 to 20% segment, so it's again a high risk segment, and it become very important and imperative for us to have a robust credit assessment process or framework in place. So
Yeah.
this is all about the process which we follow at Jiraaf. And now I think Prateek, we can open it up for Q&A.
Thank you, Ankit. Thank you, Ratnakar. Uh, for our audience, in case there are any questions, please use the Q&A box. You can type your question there and we'll try and take them one by one. We'll also add some inputs in case there are some common areas that come from a variety of questions that have been put up. The first question is a simple one, which is, are the recordings for the previous webinars available somewhere online? This is from Saurabh Anand. Saurabh, yes, all our webinar recordings are available on our YouTube channel. You can Google or you can find them on YouTube. Please do follow our YouTube handle as well. The next question is from Ujwal. Average invested amount of each of your investors in their portfolio. Which will typically over the year, we have found that an investor that comes onto the Jiraaf platform makes an investment in the first month they complete their KYC on the platform. And then over the subsequent 6 to 7 months, they typically end up making 5 to 6 investments during that period. Depending on the appetite of the investor, they commit their own corpuses. On an average, I think that number would be about close to about 8 to 10 lakh of a portfolio value that they're able to create in the first 6 to 7 months of them being on Jiraaf. The next question is from Nikhil Agarwal. What's the vehicle you use while investing? Are you operating as an NBFC or do the debt investments happen directly in the company? I think, Ankit, we can answer this in two parts. What do we do for long tenor deals which are more than 12 months, and what do we do for investments that are less than 12 months?
See, for the long tenor deal, we basically what we do, we participate in a primary. We basically, the instrument is NCDs which we use for investment. So we participate in the primary subscription and then we downsell it to the individual investors. So those are for the long tenor deals, and for the short tenor deals like invoice discounting, we uh, we basically we list the transaction on the platform. What basically happened in this in terms of structure, it's a direct sale of receivable, sale of asset. We list the transaction on the platform, investor comes and invest. We aggregate the money and pass it on to the borrower. And on the repayment date, borrower will make the payment and we will distribute to the investors. And entire money flow happens to our escrow account. We have collection escrow account, and we have repayment escrow account with a trustee, monitoring the entire transaction.
To simplify, also, I would add two things: that each investor has the choice to pick and choose the assets they want to invest in. Giraffe does not control that money. Either you get, in a case of a asset which is more than 12 months, you will get that debenture reflected in your demat account. So when you participate, you actually purchase that NCD and that reflects in your demat account in within 48 hours. In the case of a short-term product, it's a contract note. So you'll be able to see it on the dashboard, and that Ankit, as Ankit explained, the money will flow through an escrow, and on the due date, you receive that in your account. You choose where your money goes, and you choose in which risk opportunity you want to invest in. Next question is by Shagun Sharma. Could you please provide a PDF version of this presentation? I think that will go a long way in strengthening the trust of investors like me who do have registered themselves on Giraffe but still skeptical about when it comes to trust. Shagun, we do try and win the trust of all our customers and prospective customers like yourself. We take that feedback. We'll try and put out as much of this data as possible. We are trying to actually put up a page on the website itself, which will summarize some of the tenets of the risk framework that we follow. But this feedback is welcome, and we'll try and provide this data in some form or manner to our wider audience. The next question is by Abhishek D. That when you're providing working capital, do you check for the following? What is the working capital requirement? Is there a case of double financing? Do you get assignment of proceeds confirmation from the payer? Ankit, Ratnakar.
Yeah, on the can you just repeat the first point?
Whether we assess working capital
So
requirement.
whether you assess the working capital.
Yeah. So on the first point, we follow the NPDF method, which generally banks use to ascertain the limit, and on a monthly basis, we also get the stock statement and we do the calculations, and basis within the NPDF limit, we do any funding. Then the second point was
the second point was, do we check for double financing, whether they have not been financed by any other bank or lender? I presume that is for the same set of trade receivables.
Right, yeah. So we see basically for most of the invoices which comes to us, we do a due diligence on that. We get a ledger, accounting ledger confirmation from the borrower, whether that invoice has been repaid or not. And also in maximum cases, we try to get a confirmation from the payer as well.
I think contractually also, when someone signs a contract note that has a specific representation calling it out that this is not double financing, it is part of our all standard documents. To the third point, which is, do you get assignment of proceeds confirmation from the payer? We try and get it in most cases. However, in some cases where the enterprises are large and the vendor is small, it sometimes becomes difficult. So it varies a little bit on a transaction to transaction basis. The next question is from Raghavendra Narayan. Does promoter guarantee means holding a collateral for the invoices raised?
I didn't get the question.
I think the question is, that does the promoter guarantee means holding a collateral for a specific invoice transaction, or is it for a wider sanction limit?
So see,
It's for wider sanction limit.
yeah,
Like, so for the entire, after we initiate a transaction with any counterparty, the kind of collateral we take from the, at the first deal, that applicables, and that uh, set of collaterals we put in all the subsequent deals with we do with the with those set of counterparties.
till
So
the
that
limit
will,
is active with us, so
yeah.
those set of covenants or guarantees will remain with us. So it is not deal specific.
I think the individual deals that you see in the platform, a quick example would be if we sanction, let's say, 20 crore for a counterparty. The actual deal that goes live might be 2 crores or 3 crores, depending on how they get the receivables or how their trade is structured at the moment. But the other set of collaterals, in this case, a promoter guarantee, would cover the entire sanction amount.
Yeah.
The next question is by Tejas Shah. Out of all the companies which approach Jiraaf for funding, what percentage passes through the due diligence process?
So Pratik, I think you'll have the number, but I have the approx number. I think we have evaluated around 200 or 250 clients so far, and right now around 45 of them are actively working with us. So it is around 20% of the borrower who comes to us who get, activated on our platform. If the numbers
I'll
are
layer it up one
yeah,
more. And I think to our investment team, the funnel is much wider, where they might come across about 400 to 500 companies. And the investment team acts as the first line of defense, where they go through the numbers. And some of them does not even make it to the IPA, which is the initial approval stage, or to the risk team.
this team,
So
yeah.
about 50% are discarded there. And then the rest of the 50%, a little more work is done. And out of that, then about maybe 100 or 75 odd reach the final due diligence stage, out of which we might end up transacting with 40 of them. That's our current statistics. So on a funnel basis, about 10% is the hit rate that we have got. And over time, we see us maintaining the same hit rate, because in the market, there are, given the macro at the moment, there are enough people trying for funding, and it's time to be cautious about credit. So we try and be as prudent as possible. The next question is by SM Anthony Franklin. Giraffe score, is it published at launch of instrument? Can it be shared?
Uh,
So we are in a process to, share the giraffe risk category with each deal. Like, on the basis of score, we have identified, like, 5 categories on the basis of which a counterparty can be evaluated. So from, low risk to high, and very low risk to very high risk, there are like 5 different categories we have identified, and we are in the process of, launching that tab in all the deals. Maybe that will get live in next
couple of
month, 1 to 2 months maybe.
Perfect. The next question is by Tejas, which is, what will be the impact if any fintech companies start offering invoice discounting deals? Will it reduce the IRR generated, as platform may not have bargaining power with the borrower? I think, Mr. Tejas, our belief is that India is still a credit staff company. There is more than enough depth, especially in the working capital zones, when you start to work with new age companies, when you start to work with MSMEs. Only really the AAA and AA credits have access to robust bank lines. So I actually wish that more and more companies try and come up and serve that gap. I think the cost of capital reducing will help the borrower, will help the economy. So we welcome all competition. I think Giraffe has the wherewithal to actually find good borrowers and continue to bring good opportunities to you. So we are not worried about that part. The next question is by Vishal Dhruv, which is, for invoice discounting deals, does Giraffe underwrite the whole receivables and then structure the deal into smaller amounts for investors?
So I'll take up this one. So no, so basically we don't underwrite the entire receivable. So it is on a deal to deal basis. So as Pratik said, say for example, we have sanctioned say 20 crore limit to a particular counterparty, and we are taking a 2 crore deal live. So we will take a 2.5 or 2.25 equivalent of invoices from them, and we will take the deal live. So we don't underwrite the entire receivable of the counterparty.
Yeah, just to add, Giraffe does not underwrite or guarantee any risk that you carry on the platform. We are happy to help you with any queries that you might have. But when you participate on Giraffe, you are carrying that risk. So please be aware. We'll be happy to sort of outline why we believe in a particular product and how we have looked at it. But ultimately, the risk is carried by our customers. So we advise everyone to please go through the materials that we put out. Please go through in detail about the data that we have put out, and we'll be very happy to answer any queries that you might have.
Yeah.
The next question is by Vivek. Members of the IC approval and voting process, is it unanimous? Ankit, maybe we can go back to that slide and actually
Yeah.
put up the people that are there. Yeah, Vivek. So both the founders, Saurav, Vineet, along with Vikas, Ankit, and myself, comprise the IC at the moment. All of us, as you can see on the and JP, of course, all of us, as you see on screen, have some experience in financial services. All of us have been in the role of either raising capital or deploying capital. So we bring a diverse set of experience onto the table. We also have a risk advisory panel, people with 30 years of work ex. So we do go to them for specific transactions or for advice when there are complex transactions, which we might not have the ability to deal with. So that is also part of the process. At the moment, it's a majority vote, but the proposer of the deal does not get a say or does not get a vote for their particular transaction. So it's the others on the IC who have to then independently confirm and approve that to go ahead. The next question is by Vipul. Is the rating update mentioned in the slide internal rating or related to the credit rating of the company?
So it is mostly internal rating, and we also look into external rating wherever available. If you look at the counterparties we are dealing with, they are a lot of from the startup ecosystem. So most of them will not have a external rating done. So we have a very rigorous model, as we have explained earlier. We have 40, 50 parameter where we did on a different parameter under businesses, financial risk. We evaluate each of this borrower, and this is what we come up with an internal rating which is getting evaluated every on a month-on-month basis. So rating which we are talking about here, it is the Giraffe score which we have already said, and basically it is internal rating. And in case of external rating, if there is any obviously any revision in external rating, we do keep a tab on that as well, and we accordingly we take decisions on those counterparty as well.
The next question is by Nikhil. Do investors get access to the diligence reports? What are the metrics investors can look at while making an investment?
I think we share the term sheet and deal data on the platform. I think when you go to the platform, you click on a particular deal, you get a lot of material related to information on that particular counterparty and investment amount and all.
And in case if you have any further query, you can reach out to our relationship team. They can provide you information. And help you understand and educate about the product or the investment opportunity.
Yeah, I think we put out product notes which sort of summarize the metrics and summarize a quick snapshot about that particular opportunity. So that acts as a catalyst for some of our investors who would like to consume knowledge in a summarized way. In case you have detailed questions, we'll be happy to answer to the best of our knowledge. So please do reach out to us. I think what we have found in our experience is that if we put out a lot of data, it becomes much more difficult for people to go through and actually consume that out. So we try and put it out in a more crisp manner, but happy to walk through any questions that anyone would have. The next question is by R. Karthik. Is there a plan to allow credit cards to be used for investing in invoice discounting? Karthik, at the moment, that would not be possible because the way the transaction is structured, the way the cash flow works, because it goes from one escrow to a deployment account, we cannot allow credit cards. We'll try and take that feedback and see if we can work around and put together a mechanism. But at the moment, there are no plans for it. The next question is by Iswara Murthy. What's the default rate?
Prateek, I think
0%.
you can answer this question. So, I mean, as of now, it is 0% on the platform. So,
Yeah, I think we've been lucky so far, and thanks to Ratnakar and Ankit for having a good check internally. So far, there has been no delays or defaults on the platform. The next question is by Narendra Pandit. Following changes in SEBI regulations, another platform has stopped offering unlisted bonds, but Giraffe is still able to continue. How come? Mr. Pandit, I think SEBI regulations, which came out in November, which pertain to the online bond platform regulations, that clearly said that they specifically applied to people who want to put up listed bonds or propose to be listed bonds. At the moment, Giraffe is doing unlisted bonds, commercial papers, treasury bills, all of which are specifically excluded from the OBB regulations. So we have gone through an exercise, we have read through the regulations. We've actually also creating a platform which will soon deal with listed bonds as well. And as and when the law comes up to regulate the space of unlisted bonds, not only unlisted bonds, actually, any other government security, including treasury bills and commercial papers, we will comply to that regulation. At the moment, uh, the regulations pertain to the individual instruments. So if there is an unlisted bond, that still has to go through a private placement process where the regulations are quite clear. For commercial paper, again, the regulations are quite clear. So the instrument regulations are complied with, and as and when an overarching regulation comes up for other securities, we intend to comply with them. The next question is by Ujwal. Do your deals include any insurance protection in case of default?
no, as of now, we don't provide any insurance protection again in any of our deals. But I mean, going forward, maybe if we are able to structure some deal under the regulatory framework, we are exploring the same, and maybe if it is possible, we will come up in future. But as of now, we don't provide any insurance, any guarantee on the returns.
I think we are also working towards creating some products which can have an insurance coverage. And as we are able to bring that, then hopefully that will add a little more value to our customers. So that's good feedback. And we do intend to maybe in the next 3 to 4 months bring out products which also have an insurance layer to them. The next question is by Subahu. Despite such a rigorous credit appraisal, if any borrower defaults, what measures are lined up to recover dues in case of bill discounting and other instruments?
I think you would like to take this up, or
I think let's cover both,
yeah.
which is in case of debentures, what are the methods to recover the dues? And in case of a contract for bill discounting, what are the recourses or what are the methods that an individual or that transaction holder can go to?
So in case of NCDs or corporate debt, where I mean, the instrument is secured or backed by asset, so we have, I mean, in case of default, we can, I mean, obviously approach NCLT through the trustees, and we have underlying asset which can be also enforced. So, for example, in case of real estate transactions, we have underlying hard collateral which can be, I mean, liquidated to recover the money, or NCD. We can also approach NCLT. So there are a lot of legal, ways where we can recover the. I mean, and generally we sit on, in case of, say, for example, high risk, I would say opportunity, we sit on a set cover of 1.5 to 2x, so which gives us a lot of cushion in case of any default in those transactions. Uh, in case of invoice discounting transaction, basically these are again contract which are basically true sale of assets, and the documents, and apart from I mean the what I mean bill discounting agreement, we have additional collateral. I mean, in few of the cases like PDCs, which can be used to, I mean, create I mean, little pressure on the borrower and to for recovery. So even in this case, we have again legal measures in place where we can approach court and, if required, in case of default. So Pratik, you would like to add anything else on?
No, I think that covers it. In case of a short tenor product, I think we have various remedies under the agreement that are there. We'll be happy to take up specifics, but essentially you have to go to court and enforce a contract. In case of debentures, of course, there is a trustee that will come in and enforce whatever is written in that particular debenture trust deed. So ultimately, you have to take what the legal remedies are as per the agreement for whichever instrument that you take up on Jiraaf, and that has to go through a process. The next question is by Abhishek Jain, which is Adisesh Projects has recently raised funds, giving the rate of around 15%. Is there any option to redeem it before the redemption date? Any secondary market for the same? If not, we can work on it, and one can redeem the funds maybe at a discounted price. Again, Abhishek, thanks for the input. We advise all our customers at the moment to get in with a view that you will have to hold the asset to maturity. At the moment, there is a very, very limited secondary market, which is outside of the fold of Jiraaf. We do not buy back, we do not encourage a secondary market at the moment on the platform. So while these securities reflect in your demat, and if you find a buyer, you are most welcome to transfer it, that it's outside of the fold of Jiraaf. We take the feedback, but our proposition to the investors is that when you get in, you have an opportunity to view the repayment schedule. So please go in with the mindset that you will have to hold the asset to maturity. The next question is by Ajay Gupta. In the last 6 months, in how many companies have you identified any concerned and stopped recommending them?
Ratnakar, you can take this up.
On top of my mind,
I think I can maybe help out. The first thing really is that a lot of companies, as we discussed, we would have looked at about 400, 450 of them, out of which we are really transacting with 40 of them. And what happens, you will see on the platform, is that we sanction limits. So if we have deployed, let's say 20, 30 crore to a particular company in a month, you will see that company missing in the next month or 2 months because we have hit that limit. And that's the risk position that we see in that company. Then we monitor that company on a month-on-month basis. And subsequently, if we find that the risk is increasing, we will start to reduce our position. So our first check really is that if we find any risk, we don't deal with that company. If we find limited risk, then we alter our position size. And of course, if there is increasing risk, then you will not see that company coming back on Jiraaf. How many of them are there? I'm sure Ratnakar and Ankit can answer, but that's the process that we intend to follow.
I think to add to that, like on what basis we reject a lot of deals is basically on the cash burn basis. Let's say the company is burning a lot of cash, they are making huge losses in comparison to the cash position they have currently. They don't have a clear visibility on the business model. We do not get a comfort on the upcoming cash flows in future. So those kind of startup companies where the companies doesn't have that much of vintage, there is a huge loss on their balance sheet, on the P&L, and uncertain cash flow positions, that in those sectors, in those space, we are a little skeptical, and that's where we try to not take up the deal in our platform.
I think the next question is also slightly related to it, which is most of the companies listed with you for invoice discounting are startups and have got funding in the past. Now with funding getting difficult, how do you see the scenario going forward?
So again, I mean, as Prateek, Ratnakar, all of them has explained that, see, we do a very rigorous monthly monitoring, and wherever we see, as Ratnakar mentioned, we assess the cash burn, and wherever we see any stress signal, we take a hard stance and we stop doing deal with that borrower. So not to name, I mean, not to quote the name, but we have done that for at least 4 to 5 borrower where we have reduced the limit, and we have also planning to exit as well. So, and you can easily, I mean, when you come and notice on our platform, you will not see those borrower new deals coming on the platform. So we wait for the deals which are already done to mature, and then we will exit that borrower. So there are different parameters on which we will keep assessing every month. And if we have to take the hard stance, we will take the hard stance and will not do the deal with those borrowers.
I think maybe to add a couple of points, Ajay, you're spot on that the macro is difficult. Funding scenario is getting tougher and tougher for startups. I think all of us internally are very cautious about the companies that we deal with. And while you will find a lot of them are startups on the platform, you will also find that a lot of them have raised money and are well capitalized. We are not really going lower on the credit order and doing fairly early stage startups. We are dealing with mature companies which have raised significant amount of capital and have built reasonable businesses. Even with that, as Ankit and Ratnakar mentioned, our idea is to be on top of these things, to monitor the data, and then to prudently sort of exercise what kind of limits and what kind of checks should we have. The idea, of course, is we believe some of these companies are inherently good models, and if they are able to break out and if they are able to become profitable, then they will continue to be good opportunities for investors like yourselves. We are, of course, increasing the number of borrowers that we deal with so that investors like yourself can really have a portfolio and can diversify that risk. The next question is by Mayur Mudani. Any deal made so far on your portal and not able to give the return as committed?
Pratik, I think, I mean, all of our deal, I mean, as far as whichever has been listed on our platform, we have given exit with the committed IRR or
Yeah.
coupon, whatever you say. So there has been no deal where we have underperformed in terms of yields.
Yeah.
Yeah, I think there was a question related to prepayments also on that. So you would find on the platform that there are prepayments, but even in those cases, the IRR that is promised on the platform is exactly the same. The absolute returns might be slightly lesser because the borrower has prepaid. We actually encourage the same because if someone wants to repay their debt faster, that's a healthy sign. That's a good sign for the company. That means that they are doing well. And there is no reason that we should restrict that because the investor IRR is also being met. The next question is by Sandeep Vedya. Does Giraffe also participate as investor in deals or deal is completely passed on to investors for participation? Sandeep, Giraffe as a company does not hold risk at the moment, and I will segregate that in two parts. Specifically for less than 12 months, we do not participate as a company. For anything that is greater than 12 months, we do subscribe to it in the primary, and then you are purchasing that asset from us. So, in case there is no demand, we carry that risk to the tenor of that particular transaction. Having said that, I think most of us personally do invest in the opportunities that come up on the platform and have a reasonable portfolio on Giraffe. So that is our commitment to that. We hope that in the future, Giraffe as a company would also start to hold some part of the asset, but there are some regulatory constraints that we are trying to figure out, and then we will be able to participate in the risk alongside our investors. But at the moment, just to be very clear, Giraffe does not hold a portion in the deals at the moment. I think the next question is by Nikhil Agarwal. Do you have a legal team? Have you handled legal cases in case of payment delays in the past?
We do have a in-house legal team and also an in-house compliance officer who takes care of all our legal documentation. Wherever on the deal structure we need any advice, they structure the deal on the from the legal perspective. And in the past, as we have said, there has been no instance of delays or default in any of our opportunities. So far we are fortunate, and we have been fortunate enough that our legal team has not to go to that path, recovery path. So in case if it is required, the legal person who is currently handling our legal team, he has a good experience in financial products and he understands the nitty-gritty of the regulations as well.
The next question is by Ujjwal. What are the industrial sectors that Giraffe primarily lends to? Does this depend on your team's ability to assess the firms in the sector?
Just to answer this question, see, in currently, if we look at our portfolio, it is well diversified across those startup, but within startup across different subsector as well. So we are doing real estate deal, we are working with EV, two-wheeler EV players, we are working with NBFCs, we are working with contract manufacturers, we are working with companies who are into e-commerce. So our portfolio, if you see, it is well diversified as of now. And in terms of our expertise, if you say when we say startup ecosystem, Prateek has spent a considerable amount of time in the startup ecosystem, so he has a very good understanding of how startup ecosystem work. In terms of real estate sector, the transaction which we do in real estate sector, I'm having myself is having around 13 years of experience funding only real estate projects on the risk and the credit side. So we have a team who has a diversified experience, people coming from different sector with different experience, and most of the time we try we have I mean we have a good understanding of the sector, and wherever we find it difficult, definitely go to independent agencies who have understanding of the sector. We take their views on the transaction, and for example, in case of real estate transactions, we go for a like legal due diligence on the property, whether the land documents are clean or not. For the valuation and the approval side of the project, we go and refer to international IPCs like CBRE or JLL wherever required. So we have an in-house team who has a decent amount of expertise in across different sector. Wherever required, we also go and take help from independent agencies who are expert in that particular sector.
Thank you. The next question is by Arvind. Difference in working of traditional bank finance and Giraffe.
Okay. So basically, I have come from banks. So in banks, basically they have lower risk appetite because they have to be concerned cautious about the depositors. So their risk appetite is very less. They only lend to very huge corporates or maybe in SMEs at the best. They do not easily fund to the startup ecosystem or the companies where there is less vintage, or the company is not managing their account with that particular banks, or maybe the other banks or other institutions doesn't have any exposure to those set of companies. On those companies, the banks do not take that much of comfort, where at that level our kind of fintech companies come to breach that credit gap for the startup ecosystem, for those companies where the banks will not be able to enter.
I think I'll add maybe 2 or 3 points to this. Typically in India, as I mentioned before, the banks cater to very well-rated corporates, which are AAA and AA, and a lot of credit gap is there between A and A plus categories, right down to triple B and onwards, including performing credit and startups. So that's where we began. And now, if you map out the journey of Giraffe, you would also see an Angel One, you will also see a Carrot Lane, you will also see a Home Credit, you will also see an Edelweiss, which are very well banked institutions. We are able to still cater to them and bring out these deals for our customers because that's an essential part of your portfolio, but also because we are able to offer them debt at fairly competitive rates. In that sense, the difference between us and traditional bank finance is really turnaround time, understanding of the model, the ability to distinguish how repayment would work and customize the repayment schedule, making it structured credit instead of offering templatized funding like sometimes banks do, where they will say that, look, unless you give me 30% collateral, there is no deal on the table, without really diving deep into the numbers or that particular business model of a prospective borrower. So at Giraffe, we are trying to work more closely with the opportunities, with the borrowers, take them through a process, understand the risk at hand, and then try and curate a set of opportunities which becomes a win-win. Try and provide credit to various growing companies that are present in the economy, and give opportunities to our investors to participate in fixed income across that risk and return spectrum. There are a fair amount of questions on when there can be a Giraffe app. So let me take that one. I think at the moment, we believe that our web browser works well, and we'll be happy to get any feedback on that. We are trying to create an app as well. So soon some of these questions can be answered through the app as well. But do let us know of your feedback on the web browser. At the moment, fixed income hopefully is a less painful way where you invest and you conveniently get returns, and we don't want to bombard you with news alerts and app alerts that are coming through. So we prudently said that, look, let's make investing easy, and as long as we have a clean interface, as long as investing is easy, that should suffice the purpose. but we do take the feedback that some of our existing investors specifically would prefer an app, and our tech team is working hard at it. So we'll keep you posted on how that evolves. I think we can take maybe last couple of questions. And this is a one by Mandar. Is the team in place who do check randomly if the material is supplied as specified in receipts to reduce risk, so that no fudging can take place in raising of the invoice? I presume this is for invoice discounting, but this is essentially what are the checks and balances that we bring to a transaction like that?
To answer this one, see, basically, apart from the invoices, we basically also insist on a lot of other different documents related to the, movement of goods from the supplier factory to the, the buyer's factory. So we insist, we also take road, transport challan, we also take their sales register, we also take their copy of their inward register and outward register from the supplier and the buyer. So these are the checks on the documentation side which we are currently doing. See, on the physical verification of the asset, so far we are not doing as of now. But on the documentation side, we take a lot of background document for that invoice pertaining to the movement of good and also the invoice as well. So that is what we are doing as of now.
Yep. One of the last questions, and I think this has again been reiterated by 3 or 4 of our audience members, that why is the minimum ticket size on the platform as 1 lakh, and can we bring it lower? I think the idea behind that 1 lakh was that anybody putting up that corpus through the platform will at least go through the data, be financially aware, and understand the risk. We firmly believe that we are in the business of actually taking risk and making our audience and customers aware about the risk, and still allowing them to create a good portfolio and earn a healthy yield. So that was the thought process behind the minimum ticket to be kept at 1 lakh. You will see in some products, we have just experimented with a handful, saying that it can be 50,000. And that's been more specifically with treasury bill, which we believe is the STAFET, that's money to government of India. But yeah, the idea is that as we see that we cater to a much more aware, a much more risk savvy audience, we will try and lower that threshold. So the feedback is well taken. The idea, of course, is, and that's my request to everybody on the platform, please go through the data. Please look at the opportunities. Our risk team, our investment team does a lot of work trying to bring these opportunities to you. We'll be happy to take questions. We'll be happy to guide that path. But do create a fixed income portfolio. Be aware of the risk that you take, and hopefully you will do so using the Jiraaf platform. And with that, I would like to thank all of you for participating in today's webinar. I would like to thank Ankit and Ratnakar for taking the time and addressing the questions and walking us through the process at Jiraaf, and wish you all a very good evening.